does. It maintains awareness.
Okay, I guess I'm on. It says I'm not on. This is so confusing. All right, so I'm going to show Oliver in the full entirety.
Does. It maintains awareness.
Okay, I guess I'm on. It says I'm not on. This is so confusing. All right. All right, so I'm going to show Oliver in the full entirety.
Does. It maintains awareness.
Think about the priceless nature of this. You get this one thing down and it pays you forever, forever and ever, like as long as you trade. This is something that doesn't change. Do you understand? This never goes away. What I just taught you here, it never goes away. I've been doing this for 30 plus years. This same thing for 30 plus years. It never goes away. And it's in every market. So you pick your poison, right? It's crazy, right? Crazy. Now, the only thing I will tell you is that you have to, the only thing I will tell you guys is that you can't get into this mode of being bothered by the 1 to 3 that don't work sometimes out of 10. You can't let that move you. You can't let that alter anything. So imagine this. Imagine that you have magic loaded dice, and you know that every time I roll this magic loaded dice, I get the number 7, 7 times out of 10. I get the number 7, they're programmed. I get the number 7. Every time I roll at 10, I get the number 7, and sometimes more, but 7 out of every 10. So now you start off a roll and you roll once and you get 3. You lost. The point is that should you now start betting with different numbers? Wait a minute, I didn't get 7. Maybe I should bet on a different number. No, because you're gonna get 7 if you just get to 10. And what a lot of traders do is they start betting on different numbers instead of staying with 7, because I know, okay, my first 2 rolls, the first 2 rolls in a set of 10 were losing rolls. That means that I should be close to just a barrage of wins, because there's only 3 out of 10 that don't work. So you can't let a loss or even 2 losses in a row move you when you know that if I just do this long enough, this is a huge, huge profit generator. It's like having a freaking ATM machine, I'm telling you. All right? That you don't deposit in. Other people deposit, you just withdraw. How amazing is that? That we have this ATM, right? That we don't put money in, we just pull money out. I love it. How do you not love that? All right, let's go.
It's been very difficult these days, these last few days, especially to grab narrow fat fours. You've got these really, because of the massive sell-offs toward the end of the day, you have these declining 20 period moving averages. Okay. So let's just see if things sort of produce gap and snaps. All right. But it looks like we got more of a gap up warning here. Okay. We're going to see if these gaps hold. There are a lot of things that are oversold on the dailies, but not quite sure in today's uncertain environment, people are going to commit to these gaps to the upside on a Friday. To hold over the weekend. Well, let's see. Remember, we can't predict what the first 2-minute bar is going to be. That is impossible. Don't get tricked into feeling as though you need to anticipate so quickly because you're missing something. This is a novice feeling, okay? Don't do that. I'll be monitoring what's falling actually after the gap up. All right. I'll be monitoring that. So I'm monitoring red. Let's see. I'm curious. All right. What's falling after the gap up? It's still early. Don't feel pressured. You've got time. Also, share the wealth. Let us know what you see anything interesting. All right. We're not even at the 1 minute mark. Don't feel pressured. Don't do it. This is Microsoft surging off the 200 here. Can it close the gap? Oh, no. All right. Let's see. Trying to close it. Boom. Come on. All right. Meta dropping. Position 2. Like I said, I'm monitoring the red. That's what I'm doing. See what's coming off of their gap ups. Now, what's staying strong? Let's see. Oh, look at that. Look at that. Look at that Microsoft there. Come on, baby. Boom. Boom. All right, not bad on that Microsoft short there, guys. Boom, there we go. You lot what you see. Boom. Ha ha. There you go. I'm gonna close that gap there. There's my entry area. You guys know that. That's just a surge off the 200. Looking for, because I'm in the trap zone, I'm looking for the range to be bridged. Does that make sense, guys? What I did there? Makes sense what I did there? Teza, yes, got some lunch money. Teza, are you back home yet? Or are you still in Dallas? All right. So Meta has turned around. XOM surging off the 200. It is a little wide. Be careful. With these things, wide, but we're surging off the 200 there. Love those surges. Where off the 200? Let's see. Yeah. Look at this 200. Look at that. Looks like a 20 period moving average slope. Wow. And that makes sense because if you look at the daily on Square, look at that. It's crazy. But with the big gap up, let's see if that holds or starts to give way. That would look sus. suspect up there, but we'll have to see. Whoa, Microsoft's still going down. Guys, I think the bounce in Microsoft is shortable even now. I've had that little micro bounce here. I got a little bounce up here, but I think even the bounce is shortable if it's not too violent. Disney's power off of 200. Oh, nice. Okay, I see that. Gotta love those 200 surges, guys. Gotta love them. Intel. Yes. I see it. Nice on the Intel, Robert. JPN. All right, weak. Coming from the trap zone. Ooh, short. Okay. Start seeing a lot more red than the day started with. Let's see if this Microsoft gets a little stronger bounce up there. It's not doing it. Who did the Microsoft with me? Did anybody jump on board that? Lynn, Antonio, nice. Okay. There were some orders up there. Those there. Oh, a little extra change here in the Microsoft. Thought wasn't bouncing so much. Got a little tiny short there off. Things up to 3,600. I'm gonna still monitor this though. Still monitor this. Google. All right. Nice little slide there. I'm surprised how the Meta is holding up well. Popped back up there. New highs. Excuse me. I see it. I see the Tesla. Guys, what else do you have going on? You are in the trap zone. You do realize that, right? As long as nothing wrong with playing the trap zones. I just want you to be aware of it. Yeah. The GP. Here's the Meta. AMD sharply declining 200 there. So I'm going to just be careful with that. So, Microsoft weakness, JPM weakness. Some of you guys got the GBI and JPM too, right? Jan, you got the GBI too? Nice. Is Baba starting to roll over? Guys, remember the 3-point litmus test, right? Name it and name the play. Position it. Make sure it's not in a stupid position and risk it out. If it doesn't work, will you lose less than your maximum loss per trade? Less. Not will you lose your maximum. Lose less than your maximum. That's you need all three of these to really be a go, guys, especially in this market environment. Look at that surge off the 200, clearing elephant off the 200. What a strange looking 200 just because of the daily gap. But wow, who feels they got the best trade of the morning of the open? Who got the best trade of the open? Who got the best one? I got a good one off the 200. Who got the best one? Intel. More impressive. Intel is a nice one. It's a nice one. It's a 60-cent drop. So low in price, but JPM. What's it? Cisco, did you grab that clearing elephant bar, Bruna, on the tail bar? The first bar of the morning? Or the one a few bars before? This one or the first one in the morning? What? ABBA, C. I was holding, actually. I just want you guys aware. I want you guys to maintain awareness. And that's the key. What I mean by that is not like you can get out of a trade and then realize, oh my God, why did I do something stupid like that? That's, you lost consciousness. You lost awareness in the middle of the action. And the awareness came back after you exited. So if you're realizing stupidity after the trade, you're losing awareness. That's what that list in front of you does. It maintains awareness. That's what the trading poker cards do. It keeps awareness. Don't lose awareness. This is beautiful. Square. It's beautiful this morning. Classic whale complete there. Yep, bear 180 off the 200 trap zone. But yeah, has it been a challenging period for you guys, or has it been okay? It's challenging. Guys, give me some reasons why this move here was so strong. Give me some reasons. I want to see if you guys have been paying attention. Throw some reasons out there. All right, dual tail bars. Got it. Anything else? Yeah, I like that, Dennis. Prior days closed. Let me see. Support prior days closed. A gap closed. Okay. Need your support here. That's right. Sloping 200. Okay. Did anybody say dual space? Pretty much got that as well, based on the low. All right, good. But you're on the outer end of it, right? See what I'm saying? James? No, we're on the end of it. This is where you want to be careful. You got here and there. On the outer ends, all right, you can play to the other side. I did that with Microsoft today. Play to the other side. All right. Buckle your seatbelts. Get yourselves nice and comfortable. Grab something to take notes with. These are sessions that you definitely want to take notes with. And these are sessions that you definitely want to repeat a variety of times. Repetition has a huge value. So sit back, relax, grab something to take notes with. This is going to be a big, big win for you. Traders, we learned that we retain less than 60% of what we take in the first time. It is only after about 3 or 4 repetitive repeats, if you will, that you get closer to that 90% retention. So you definitely want to use the law of repetition to really make things sink in. And there's also something interesting about repetition, traders. It's every single time you repeat after a certain amount of experience with the material, you repeat the material from a different state of experience, from a higher state of being, if you will. That higher state of experience, that higher state of being really allows you to take in more of the same information, but it hits differently. And so you can't be the same after an experience. You can't be the same after you've become more experienced in a thing. You go out into the world, you utilize what you have retained, then you come back after a certain period of experience and repeat the material again. You're repeating from a higher state of experience. That higher state will basically make the information come alive more, and basically you absorb more from the higher state. Remember, you are the collective result of your experiences. And the name of the game when it comes to trading is to build the right experience. My team and I, we spend a great deal of time every single day making sure that we put some form of content out on this channel that's specifically designed to do just that, to help you raise your level of market sophistication, to help you gain enough knowledge to go out into the markets and build the right experience. Because there are millions upon millions of people trying to do this by themselves and alone. That makes the game a lot more harder than it has to be. And there are millions of people who are actually building the wrong experience, which means that they're actually going backwards. And so many traders have to at some point catch back up from going backwards for so long to get themselves back to square one before they can start building their future in this activity we call trading. And that is an experience, or that is a path I do not want you to take. So it's all about gaining the right knowledge to start off accumulating the right experience. And the last thing I will say before we delve into the material today is this: you cannot be successful before you become experienced. Your success is on the other side of experience. And this is something that somehow, when it comes to trading, the vast majority of people forget. Somehow, when it comes to trading, people think that they can become successful right away before they become experienced. People think that they can get lucky. People think that they can take a course over a weekend and somehow Monday morning be a better trader. Life doesn't work this way. You do not become an elite athlete over a weekend. You do not become a top tier heart surgeon over a weekend or over a month or over a quarter or even over a year. Experience is necessary first. If you gain any degree of success before you become thoroughly experienced, that is not success. That is absolutely mathematical luck. It's numerical luck, right? I don't want you to be lucky. I want you to be good. I don't want you to be lucky. I want you to be skilled. And the session that I have for you today is going to be designed specifically to help you gain the right experience from this day forward. If you do or take the steps that I'm going to outline for you today, you can be guaranteed that you're building the right experience. And if you keep going, your experience will ultimately reach that proverbial tipping point where there will be no going back. That's the tipping point that I need you to get to. My role is in your life is to get you to that tipping point. Many people consider me their mentor, but you have to understand what my role as your mentor is. I am your trader for life, but I'm not your mentor for life. I'm constantly telling you, I want to be your trader for life, but I can't be, nor should I be, your mentor for life. I am your mentor up until the point that your real mentor takes over. I am the leader. I am the initial mentor that takes you to your ultimate mentor. Your ultimate mentor is your experience. Your experience is in a baby state right now, but the goal is to build that experience up to a point where it reaches a level where it can begin to take care of you for the rest of your life. All elite athletes are elite because there is nothing they haven't seen before, nothing that they don't know how to handle. There's no hardship or game scenario or situation that they haven't seen thousands upon thousands of times. That's what makes them elite, and that's what's going to make you elite in this game. Knowing how to build the right experience is the first key. And the 10 steps that I'm going to outline for you today is specifically designed to ensure that you're out there in the markets every day building your experience the right way. All right? So without any further ado, let's actually get started, okay? The first thing you have to do is do what the vast majority of traders out there sloshing around, ruining their families' lives. The first thing I want you to do is you need to set a maximum loss per day for yourself. Guys, believe it or not, this basic thing will actually catapult you outside of the majority of traders and into the minority group that creates a line in the sand that they vow to themselves that they will never break or go beyond. You'd be surprised how many people do not do this basic thing. That is why their losses are not consistent. Their losses are all over the place. They trade like it's a casino. And when most people say that day trading is gambling, they're actually not wrong, traders. They're actually right. Most people out there that dog the profession of trading, their comments are actually right. Those people that have no faith in actively trading the markets, in most cases, they are right. When most people say, day trading is gambling, that statement is right for the vast majority of people. The point is that I don't want it to be right for you. And the first thing that you must do is to stop the possibility of gambling. And the only way you can do that is with one step. It's very simple. One step takes you out of the casino. One step removes you from the majority of traders that are treating this like a gambling activity. You become a professional the moment you do this, traders. Step one, maximum loss of $200. I would start there. Now, that doesn't mean, traders, listen to me carefully, that doesn't mean that you should be losing $200 every single day. Look at the word that is the most important word in this step one, maximum. In fact, you should rarely lose $200 in a day. It's maximum 200. It doesn't mean that you wait for you to be down 200 and then get out of everything. No, you have a maximum loss of 200, which means that the majority of your losing days are way less than 200. Maximum is maximum for a reason. It doesn't happen very often. It's your max, the ultimate. But you don't make the ultimate in every losing day experience. Otherwise, it would be called the normal daily loss. No, it's not the normal daily loss, it's the maximum daily loss. So make sure that your days are mostly, your losing days are mostly less than 200, but never, ever more than 200, ever as a max. All right? Now, let's move on. Step number 2, set a maximum loss per trade. Now, there's a distinct difference between a maximum loss per day and a maximum loss per trade. If you have a maximum loss per day of 200, then your maximum loss per trade should not be 200. That is stupid. I don't want you using the whole day's allotment to one trade. This is another form of gambling. You're going to take your whole $200 loss allotment and bet it on red 13 or black 7. No, this is not professional. This is once again another form of gambling. You're going to make your maximum loss per trade smaller, much smaller than your maximum loss per day. Here's what you're going to do. You're going to take that $200 maximum loss per trade and you're going to divide it by 3. 3 is the minimum. You're going to divide it by 3. Some of you can go as far as dividing it by 4 if you want to tighten those losses just a little bit more. I would not go beyond 4 though, but I would not start off with less than 3 either. So it's 3 or 4, your choice. In this example, I've used 3. You're going to take $200, your max, whatever your max is. Maybe your max is not 200. Maybe you can't afford to lose $200 on your losing days. Maybe your max is $100. It doesn't matter. I'm using what my traders in my training program start off with. They start off with a $200 max loss per day. In my program, I encourage that they divide that by 3 or 4. That's their choice. The example I'm showing you here is to divide by 3, which brings you down to about $66, $67 per trade. You are not to lose more than $66 on any given trade. And let me tell you this, traders, I don't want to see you, right, waiting until you've got a loss of $60, then 62, then 64, then 66, and then you kill the trade. No, that is being a novice. You kill the trade before this is $66 in negative territory. When this is $62, get out. When it's $63, get out. Don't give yourself an actual chance of going even 1 penny beyond this, because this is what builds character in your trading. This is what builds discipline. When you say 66, that's not 66 and 5 cents. That's not $66 and 2 cents. That is before $66. And when it's maximum 200 a day, it's not $201. It's before $200. Your future wins are always with you right now. I don't even care if you're a chronic loser. Your future wins are with you right now. You know where they are? They are locked inside of your current losses. All we have to do is make sure we're keeping them relatively small. $66 does that. Keep them relatively small. And every time we have a collection of losses, we crack them open to find out why. But your future wins are inside of these 66 or less dollar losses. We crack them open to find our future wins. Our future wins are always with us. They're inside of these $66 losses. It's powerful. But I first got to have you, I got to first get you to have $66 losses. How wonderful would it be to be able to legitimately, honestly say, I never lose more than $66? Do you know how professional that is? Do you know how precise that is? Do you know how amazing that is? I never lose more than $66. The market can never take more than $66 from me. The market can't hurt me. The market can't damage me. The market can't make me depressed. Why? Because I never allow it to take more than $66 from me. How many people in the world can really legitimately say that? It's powerful. I could stop the thing right here and you guys would explode in your trading if you just applied step 1 and step 2. You would explode. You don't even have to know how to pick stocks. You just throw a dart, make a list of stocks and just throw a dart, or just say, eeny, meeny, miny, mo, boom. You say, I'm going to buy that one. And then you got $66. If it drops 62, $3, boom, cut. All right, do it. Eeny, meeny, miny, mo, boom. Okay, I'm going to buy that one, boom. All right, this one goes up $80. The next one goes up $200. All right, great. If you just cut 66, math is going to take care of the rest. It's impossible not to get a $100 win, a $200 win, a $150 win every now and then. And you just keep cutting at 66 or before 66. This is without any stock picking skill, which we're going to get to next. Do not lose more than 1 bar the vast majority of the time. Do not lose more than 1 bar on your trades. Now look at what I'm saying, guys. Don't lose more than 1 candlestick bar on the chart. Don't let a stock drop below the low of more than 1 bar. If it breaks the low of 1 bar out, don't lose more than 1 bar. Not 2 bars, not 3 bars, 1 bar. Now, let's take a look at what I mean by that. Now, here's what's really cool about my presentation to you today. I use every single example of a real trade that was taken by one or more of my traders today. I just went to the records and grabbed their trades. I see everything they do. I grabbed my traders' trades. Some of them are in this crowd today. They will tell you, I did this trade, right? All right, so Uber, this was a trade taken by a variety of traders this morning. All right, boom, right there. Let me show you. Boom, they bought that bar. My traders know this as a clearing elephant bar, and they know it as a clearing elephant bar that is also igniting from not only the 200 period moving average, but the 20 period moving average at the same freaking time. Oh my God. Like, my traders will tell you that this is like, you don't think, you don't guess, you don't analyze, you don't call up the freaking psychic hotline, you don't ask your partner, or you don't check your friends in the freaking WhatsApp chat room. You just hit the freaking buy button. All right? Clearing elephant bar. Boom. Why is it clearing? It's clearing a whole bunch of data to the left of it. It's like a freaking skyscraper, the tallest skyscraper around for miles. Tallest skyscraper around for miles. That's clearing. And the origin of the clearing is off of a key moving average. In this case, the origin is off both key moving averages, the 200 and the 20. All right. But boom, they buy this bar. What do I mean by not losing more than 1 bar? They buy into this bar. Let's say they buy 500. Why max? Because in reality, it's lower price stock. But let's say they're not that aggressive. Let's say they do 200. That's 2 lots, 200 shares. they're not going to lose more than this bar. They're going to buy this bar, but if the stock breaks 1 bar, they're out. Guys, let me just tell you this. If you can lose only 1 bar the vast majority of the time, you will be in this game forever. Forever. It will be impossible for the market to eliminate you. You will grow old trading the markets. You will never be blown out. You will never be taken out of the game. You will never be destroyed. You will never be rocked. You will never need to seek counseling. You will never crash your computer against the wall. You will never throw your keyboard on the ground to break it. You will never be frustrated as a trader if you limit your losses to 1 bar. Now, let me tell you this. The reason why is because you're going to get trades that run 18 bars. But every single loss is going to be 1 bar. You're going to get trades that run 5 bars, but every single loss is going to be 1 bar. You're going to get trades that run 8 bars in a row, but every single loss is going to be 1 bar. You're going to win 14 bars, 12 bars, 3 bars, 4 bars, 2 bars, 1 bar, 15 bars, 40 bars, but every single time you lose, you will limit your loss to 1 freaking bar. And I will tell you just this, number 4 rule will throw you into massive, profitable territory. Just math. How many times is your stock going to run more than 1 freaking bar? A lot. How many times will your stock deliver more than 1 bar loss for you? Never. Think of how you're skewing the math in your favor. So now we have to combine 2 things here. Listen to me carefully, right? I need you listening carefully here. You have a maximum loss per trade of 66. Now I'm telling you that you are to lose no more than 1 bar. This is where your losses less than maximum come into play. So if the low of 1 bar is $42 loss, now your loss is $42. If you buy this bar and the low is $56 loss, now your loss is 56. It's not 66. It's 56. If you buy this bar and now your stop is under the low of this bar and the low of that bar is $35 loss, now your loss is 35. So remember, you have a maximum, I'm not going past 66, but you have many losses, 1 bar, that are way less than 66. Now, I hope you got that. I hope you got that. You understand? Okay. Now get this. Check out how amazing this is, right? Check out how amazing this is. Look. Right, check this out. Check this out. Now, let's say if you do 100 shares, boom, you buy this 100 shares, and you're going to not lose more than 1 bar. And you realize, shoot, I would only be losing $30 if I lost here. Wait a minute, I can go 200 shares and I would be losing $60, and that's still less than my max. Boom. This is a 200 share play, not a 100 share play. You're still maintaining less than that maximum loss per trade. This can help you be a size manager. Do you get this? You got $66 to work with, and if 100 shares is just too light, go to 200 shares, as long as you're not violating that maximum loss per trade of $66. So it can help you go up and down the size scale. This is freaking amazing. People are risking their families' financial welfare by not doing these simple but powerful things. People are out there gambling their money away because they're not doing these basic, simple but powerful things. People are out there throwing money out of the window that they've worked hard for because they are doing things sloppily. They are doing things that are non-systematic. They're doing things in an unstructured way with no freaking plan, no parameters, no maximums, no anything. They're just farting in the wind. This is not how you become a professional. You become a professional with these steps. All right? All right. Powerful, guys. Powerful. Powerful stuff. You're not going to lose more than one bar. All right? My traders know that this is
Wow. That was I can't even get, I'm taking notes and I can't even get myself excuse me. Yeah, a trading plan. Trading plan. I thought I had a trading plan, you know. And it turns out that what I call a trading plan is really not what his interpretation of a trading plan is, because I didn't realize that the techniques that he's talking about are so relevant to my trading, to my outcome, because I'm not using those two things. I'm all over the place. You can see this. I got 8 positions open. So that's why I want you to realize this is live, this is real, this is for real trading. This is not something that you just see everybody winning all the time. So now what I really have to do is, once I'm monitoring, I'm going to set up my screens to where I'm monitoring my live trade, but then I'm going to practice what he's talking about on a different platform. So 1 second, I am going to pull that up, and we are going to see what we can do here to fix the problem of not doing this the professional way. Okay, so here we go. All right, I gotta remove myself here. This is all live. This is all live. This is all me. So, all right, he's saying number 1 is to have a trading plan no more than trading day. Grab my notes. Make sure I'm saying this right. All right, there it is. All right, so I got so many notes. All right, so your maximum loss per trade. So seeing that my account is this is the balance here. This is demo. See, what we got to do is we got to come back to demo. I'm not going to go out like that. This is for real. This, you guys don't really understand what I'm going through here, making this thing happen, making my dream happen for real. So please bear with me. It's not the easiest thing to do, but I'm looking over at another screen, because when I'm gonna start talking, I'll be looking at you, but I gotta set this other one up before I can do that. So the thing is that let me make sure that this is correct. Oh, I didn't get the Epic Pen because you got to buy the subscription. You get a free trial, and they let you try it out for a little bit, but then they take it away from you. So we'll just do with what we've got. So he's telling me that in each and look at what he's talking about. So what he's talking about is relevant when you look at this chart. This is the chart of Santos. Okay, we're sticking with Santos because we gotta recoup from what's going on. I don't know. We're gonna check the news in a little bit, but this is just from yesterday, I think. What was it that had me trapped? Okay, here. Because now I'm looking at this, and then all of a sudden, I'm like, wait. This is what happened. Green, it was green all this way. And I bought in down here. I bought in, I think it was a minute 30 into this candle. Remember, all right, let me blow it up a little bit. Remember, he says these are elephant bars. So, all right, now I'm recording so that way if it doesn't come back up, I can always retelecast this thing. But, yep, disconnected and reconnected. I don't know what the hell's going on, but it's not cool. I don't like it at all. And it says reconnected, successful. I don't know. I can't even stop it on my tablet. But look, had I put my stop loss like he said, I would have only lost this candle. But no, I didn't follow that rule. I didn't adhere to anything that he was saying because I kept that one there and I said, well, it's got to turn around. And I put another one. Click. And then I said, man, I can't lose that because this is what I'm saying to myself. This is what I'm thinking. I can't lose this. So I'm hoping for a turnaround. And it doesn't happen, but right here, I think it's happening. So what do? Click. Place another trade. Now the market's going down. And I'm going, oh my God, this I'm waiting for this upward trend to happen. And Santos, it's on a buy for 450. This is on a demo. Okay, I'm just going to let it ride. Okay, where's my real account? I have to look at the real account. Boy, oh boy. Wow. There we go. All right. So we're still in the game. But the thing is had I waited and noticed this, isn't this what he taught in that lesson? Anticipation, entry. That was all last night. And that could have been from one single trade. But no, your boy had to have 5 or 6 of them up here. And when it came down to this point right here, they were all over $70 to $80 a piece. Okay? I'm telling you this as a leader, so that way we don't run into this situation where you're making mistakes like I made mistakes. We learn from the mistakes and we keep pushing. So now that we're going to adhere to the rule, what is going to be our max loss per trade? That max loss per trade should be divided